Hi, good evening traders. We are on the evening of 5th of May 2022. This is a Thursday evening, 7 minutes past 8 p.m. and we are looking at the daily chart of the Nifty near month futures. Not a very pretty picture because opened really well and did manage to show some bit of gains in the early hours, but then slipped significantly to almost breach yesterday's low. And we spoke about this 61.8 fib retracement level, and the index is essentially on the verge of disrespecting this level, breaking down below that, which was very clear in today's price movement. We'll take a closer look with the 75-minute time frame, which will clearly reflect the opening gains and then the follow-through movement. Very clearly, what you will notice here is, in fact, I'll use this to mark these lows, this range, and if you extend it a little further behind, and if you take a look at this closing price, the black line, if you can notice this black line, which is running through the bar graphs, this is the closing price. So in terms of the closing price, this range has been quite a strong one in the recent past. The breakdown, the bounce back, the retest, the follow through. Typical classical technical analysis principle of polarity. So the 17,000 call writers were highly respected, and it didn't allow the price to move above that 17k mark. So keeping in mind the weekly expiry, so it was a pretty good day for the call writers in the zone of 17k or above, and 17k I think continues to stay as the highest call base for the next week's expiry. So psychologically, yes, the round number 17k acts as the short-term immediate resistance for the index, and going forward, if we go one time frame higher, then yes, a breach below this low, and we don't have much volumes in the past. We don't have much volumes at this 76.4 and 78.6 either. So we might head towards these levels. Possibility is there. I'll take you back to the 75-minute time frame once more, just to tell you that the index has started to create some kind of momentum divergence, but very early signs. What I would like to see is high probability the lows will be breached tomorrow. I did take a look at the global markets, and it's not that good. 150 points down, the SGX Nifty. The US markets are down over 2% each, the major indices. So very likely we are looking at a weakish opening in tomorrow's session, unless proven wrong. So if we open somewhere here, the SGX is trading at 16,530, so somewhere in this zone. So the prospective momentum divergence on the 75-minute time frame might completely dissipate. It probably will not develop itself at all. So negativity is very likely to stay for the prices and the Indian equity markets. Wait for lower levels, wait for some base formation, wait for some divergences to shape up, which can offer us some short-term bounce back. But till then, the trend is well established. On the downside, the selling momentum is very clear. On the downside, we did notice a bounce back which failed to hold on to itself, flipped further down, again on the downside. So you don't need me to tell you what to do. If you're a long only trader, investor, wait out this phase. It's a good time to do your homework and figure out good stocks, good companies that you would like to add in a staggered manner. I like these kind of market conditions wherein I like it to add more ETFs in my portfolio, like the Nifty Bs or the Bank Bs or the CPS and the others. Gives me a good confidence to keep on adding them at lower levels. BankNifty was a similar kind of a behavior. Now, percentage wise or points wise, you might see just 115 points down, but what was disappointing was the follow through selling, the failure to hold on to these intraday highs. If I stretch the volume profile that we had drawn from a recent high to the current levels, not much. You can see one thing over here very clearly, that is this level, which coincides more or less with these lows, which coincides with today's high. So it was 17K for the Nifty and it was 36,000 for the Bank Nifty. To round numbers nice, so 36,000 call writers were also well rewarded in today's expiry. Take a look at the 75-minute time frame and you don't see much. Yes, if you drop a relative strength index with this price behavior, you will start to observe some kind of a divergence. I think that if the market opens weak tomorrow in line with the global cues right now, as we create this video, 8:12 p.m. on the Thursday evening, if after opening week tomorrow morning, if you immediately see any kind of a bounce back, I think for the week it is done. I think so. I might be completely wrong, but that needs to be checked. When I say low done for the week, I mean that the index probably will manage a short-term bounce back from here on before it decides to sell off some more. I may be completely wrong. It can be far more worse than 150 negative opening tomorrow. It can be far worse than that, depends on the global cues. But strategically, for a short-term trader, look for opportunities intraday, trade and get out. Swing or positional short-term traders who like to hold on to their positions for 2 to 5 days, you will be relatively more comfortable in the short side rather than on the contrarian long side. Option traders definitely would, I think, wait for a little bit of drop down in the range expansion, that is the volatility, and you might look to create some positions either tomorrow or from Monday onwards. Don't look to buy out of the money calls. If you are bullish on any stock, please don't do that stupidity. And wait out. I think the best thing is to do is wait for this correction to play itself out and see what's in store for us, and are we looking for a retest of this lows. Now in the markets, anything and everything can happen. At least that's what I've learned in my experience. So keep yourself light and primarily stay on the short side of the market. Wait for bounce backs so that you can sell them. Try not to trade breakdowns because as prices get cheaper, valuation gets attractive. Institutions flushed with cash would like to get into good quality stocks. So I would prefer to short on a rise rather than shorting a breakdown. No discussions on the stocks today because we'd like to see how the weekly close plays out tomorrow, and from next week we can take a look at few selected stocks. Till then, take care of yourselves, trade well and trade wise.